Okie dokie. Welcome to Money. That's what we're going to call it. Plain and simple. No fancy names. It's all about money for however long we're going to be on here. Once again, you're with the Fletch Entertainment Network. If you're on YouTube, definitely give me a subscribe. Hit the little bell for notifications so you know when we're going to do more things. And on Facebook, give me a like and definitely share and tell everybody about it. So we got lots of things that were in the hopper. One of them is especially some local guys that we're going to turn you on to that are pumping out some of the best tasty ice cream in the area. And it's some incredible flavors, 3 different pints a week for flavors. It's all through social media, and it's incredible ice cream. We've done for about a month now, and it's some good stuff. So we're going to try to get them on live and do some little talking. But right now, we're talking about money with my man Daniel. How you doing, Danielson?
I'm doing good, Fletch. How you doing today?
Good.
Good.
Obviously, with money, well, we're talking about all things money. Daniel's a good friend of mine I've known for quite long time. He's father of my extended. They're not my nieces and nephews. They're the kids of my nieces and nephews. I never get mixed up with all that stuff. But basically, a member of the family. So that's all that really matters.
That's all that matters.
However you classify all that, So he's also very passionate about money. He works in the banking industry, if you will. So he's going to answer a lot of questions. If you're on and you got a question, you can certainly drop a comment, and we'll look to see if we can get some questions answered. And if not, you can always look at it on after live. It's on demand on both Facebook and YouTube, and you can send questions in, and we can answer them later in another show, depending on how many of these we do. So. Anyways, so let's start off with something that's very hot and topical, somewhat not really controversial, except for depends on what circles you run with, and that would be Bitcoin or cryptocurrency, as it's more aptly known. Bitcoin obviously is the star of the show, but there's tons of cryptocurrency. So there's probably a lot of people that really are thinking, should I get into cryptocurrency? Should people move all their money into a crypto bank? They got these things and stuff, So, you're a man in your 30s, early 30s, right? Mid 30s, somewhere around there.
Yeah, 34.
Yeah. So as someone that's a much younger of a generation than myself, I'm on the back end looking at the bleachers. So. Run over some cryptocurrency from your standpoint and what you think is good advice for people that don't know anything about it, want to learn about it and stuff.
Well, certainly I want to kind of start with a little bit of a disclaimer. I am not a certified financial planner or advisor, so I'm not anything that I say you shouldn't really take for financial advice for life and death decisions. You don't want to take all of your bank account based on what I say and make a decision. You want to talk to a certified financial planner, get their input, make sure that you're not spending more money on investments than you can afford. As far as Bitcoin goes, I like to treat it like any other investment. It's high risk, high reward. It can go up, it can go down. Bitcoin, 4 years ago was around $1,100. And it's up to like $54,000 now. So definitely there was some money that can be made. What Bitcoin is, it's a cryptocurrency. What a cryptocurrency is it's a decentralized currency that's not owned by any government. It's not backed by a government either. So people that live in different countries that use different currencies, you can switch Bitcoin back and forth because there is no government regulating those transfers. Bitcoin is Bitcoin. That's what it is. It's increasing in value because there is lots of places that are adopting Bitcoin. They're allowing it to be used. There's larger places. There's also a finite number of Bitcoin. There is potential for it to go up. There's also potential for it to go down. It could go down at any time depending on what the market's doing.
Sure. I think I saw a documentary on Bitcoin specifically, and I think the first ever transaction for Bitcoin was somebody bought a pizza. I don't know where it was, this country or some other country. So if I think to myself, okay, if I, buy Domino's tonight, I'm probably spending anywhere between 12 to $20, depending on how many things I get with my pizza,
Right.
like Parmesan bites and all. So if let's say if there's a pizza place that takes Bitcoin, so it's like I have to get regular money, my money, into a Bitcoin, but certainly I don't have to buy a whole Bitcoin because one Bitcoin's like 54 grand, so if people think Bitcoin, it's a little thing. It's not necessarily, it's not a penny. It's not a nickel.
Right.
It's a name of a currency. So you can, there's plenty of avenues. And a lot of them are on the internet. I want to say, oh boy, and I should have just. This is when you do things organically. You don't write them down.
Right.
I know Uphold is a place where you can get into buying in different types of cryptocurrency, depending on which one you want. Obviously Bitcoin is the top of the pack. To where you can put some money into Bitcoin if you really wanted to go out and buy a pizza on Bitcoin, and then they say it's worth. I don't know what it would be, maybe 1/100% of a Bitcoin. I don't know how they deal
Right.
with transactions like that, because obviously it's a whole total ball game. But from a decentralized standpoint, there's no bank it goes through. Visa's not charging you 2%. They're not charging you 2% because it's just going to what's called the hyperledger, I believe,
Right.
which doesn't exist on any one computer. So you can't really hack it because it exists on, I believe, thousands of different computers, people who mine Bitcoin to verify transactions, which makes it, which keeps it honest, I guess, and then it's just a one-to-one relationship when you're buying and selling goods. So it's very interesting. Obviously, when you hear some people that put some money into it and came out with a ton of cash, I think the Winklevoss twins were part of that initially. Those guys from Facebook years ago. But then there was another guy I saw. I can't remember his name, but he came out a billionaire from the
Oh
early
yeah.
days of Bitcoin.
Yeah,
It's
there's
like,
definitely money to be made in these Bitcoins, cryptocurrencies. There's also money to be lost. There's people that put in money in the wrong time and lost a ton. So
exactly,
it's
exactly.
it's
Yes, that's very. There's no doubt about that. So I mean, it's almost like, hey, somebody pulled that slot in Vegas
right.
and won $1 million, and you go over there and you dump everything you got in there. It's not going to hit again for who knows when, But
And that's it, almost
maybe not.
exactly how I look at investing in like a cryptocurrency is, going to a casino. You could hit huge. You could lose everything too. I mean, you don't want to spend more than what you're willing to lose.
Right.
Um,
I think that's great advice. A few times in my life I've gone to a casino because I'm not much of a gambler. I treat it like a night out. I got $50. I
right.
could go eat and watch a movie, but I'm going to go to a casino. When it's gone, it's gone. And if I'm lucky enough that I come back with any of it, then I consider it a positive, But I certainly don't go back and get more from the card and all that
Yeah,
stuff.
you're not
Because
really
it's just
gambling if you're just counting it as an entertainment fee, right?
right, exactly. So, which is why I've never been to Vegas, because the boats are closed and that's good enough for me and stuff.
Right.
So beyond cryptocurrency, let's say I'm a 20 plus, guy, didn't go to college. We're just talking about me when I really was 20. But anyways, you got a nice job, you got some nice income, So let's say you're single. So what's really good advice for somebody who's got a nice income that he can actually do some things from a savings and investing standpoint. And I know you're not an investment banker, but as far as holding back for
Definitely.
investments to talk to an investment banker, but also saving, and think, earlier today, like I said, I did a home show with a guy. And one of the things was, when I was single, I didn't want to buy a home because I didn't want to be the only one there working on all the home, so
Right.
depending on who you are and what you're doing, certain things are a lot more valued to some people than other people and stuff, So, but just in general, everybody should be saving. Is that not good advice?
Well, definitely everybody should be saving, especially if you can get free money. A lot of companies that you work for will offer 401k. A lot of places that you work for will match up to a certain amount, a certain dollar amount of what you're putting in. For instance, like if you're working and you're putting 5% of your paycheck into your 401k and your employer matches up to 5%, you're essentially getting 5% of your paycheck for free set aside into you're doubling your money for that 5%,
Right.
saving it for your future. people who have health savings accounts, certain employees will match up to a certain amount on those too. It's a little less common, but a lot of employers do match 401k contributions as well, up to a certain dollar amount. So check with your employer, see if they do have any kind of benefits like that. The earlier you can start putting money into your 401k, the more you're going to have down the road, because it's going to
Right.
be interest is going to be compounding and building on that interest that it's earning, and that interest that you earn is going to earn interest, and it's just going to keep roller coastering up on that. Making sure that you're investing a little bit more conservatively the older you get, the younger you are. Say if you're in your 20s, you might want to put your 401k investments um, with a little bit more aggressiveness that has more risk, but you have more potential to earn more over the long haul.
Right. Yeah. Yeah. At some point, I'm 51 now, so I'm somewhat looking into the possibility of lowering the risk factor of my 401ks. I've always had it, a higher risk because, I was 25, 30, whatever. But, one thing I would definitely, I've always thought was good advice for younger people is, especially when a lot of people, I got the rest of my life to think about retirement, and you do. But if you start early, you can get a lot done with very little and not have a lot of burden. Especially if you start small and every week, $10 a week, it doesn't sound like much, but if you
Oh yeah.
add that over 52 weeks a year and over, let's say 20, 30, because if you're 20 years old, you're going to work till you're 60, that's 40 years. 70, that's 50 years. It sounds like an abominable amount of time, but trust me, I'm 51. It goes real quick.
Oh, it
But
does.
once you get it to a certain point, you can take chunks of that money and start doing things like Roth IRAs and other things, and doing better investments where I think Roth IRA is a tax-free growth, which is nice. It's after-tax money and stuff. So it's really easier to do that when you've got some money saved up, which you saved up when you were younger and didn't have a lot of the things that, instead of like what I did, which I had a lot of fun in my 20s, maybe a little bit too
Right.
much fun, and got to 30 and turned around, didn't have a whole lot to show for it. So I had to adjust. But, you live and learn, and it's not all end all. But it's just good advice for people that are thinking about, things to do with their money and stuff other than spend it or give it to whomever, you can give it to anybody you want. But charity is great. There's no doubt about it. Charity is awesome. Well, I know we were discussing, so we talked about the 401ks and Bitcoin and stuff. And I know the benefits between, I should say the differences between banks and credit unions. I know you can speak intelligently about that. So I think that's a good
Really.
topic.
So yeah, my background is actually I've worked in the credit union world for close to 7 years, actually close to 10 years. I've been with the same company for about 7 years now. So I've got a decade in banking with credit unions. Banks are for-profit corporations. They have stockholders, they have employees, and they have their customers. Whereas a credit union, we're not-for-profit co-ops. We don't have any stockholders, so we have the employees, which are the owners of the credit union. Usually, it's required to have a share of money in that credit union to be part owner. And then we have our employees. We don't have that third part of that triangle, those stockholders that you have to make happy and make sure they're making a profit.
Okay.
Credit unions are kind of operated more by a board of voluntary directors, so they're not getting paid. They're doing what's best for the credit union, what's best for our members, not what's necessarily the stockholders at a bank are doing what's best for their paychecks. So
Okay.
typically you'll see better rates for savings and deposits, and you'll see better rates for your car loans, your personal loans, your mortgages with credit unions versus banks. They also give you that banks are bigger corporations. They usually spread more across the country. That attracts a lot of people because if I move here, if I move here, if I move here, I got this bank that I can go to no matter where I go. Credit unions are usually local, more personable service areas. But to compete with that larger, widespread, area of banks that have, more of a continental area, credit unions kind of group together to do like this shared branching, where if you access your account, in Dayton, there's another credit union down in Tennessee or Texas or Washington State that also participates in shared branching. You just go in there and say, I need to access my account at this credit union. They'll pull it up. They'll be able to do a withdrawal deposit, basic transactions.
Okay.
A lot of things are doing more electronic these days as well. So like the need to actually go into the bank daily isn't there as much anymore. You can apply for a loan. You can usually sign for a loan online at certain places.
Okay.
We got online bill payer. You can do check mobile deposits. The convenience of banking is a lot easier now.
There's no doubt, and it's funny. I credit union around the corner, but especially with COVID, the line is still around the block, but the inside was closed, so there was a lot of that too. Because there's definitely, it's kind of a generational thing. I think the older generation still wants to get out and go into a bank, or
Right.
a credit union, and I think much younger, or they're into the apps. I've done mobile deposit many times, and it's convenient. Sometimes you get those.
Yeah.
Big whopper checks, and those are kind of interesting, funny to try to take a picture of because they're so big. You back away from them, and then it tells you it's not that clean of a good picture. And that was a few phones ago. I think the phones I got now, the cameras are picking up, the resolution really good. So, most of the time I don't even have checkbooks anymore. So the only time I usually go to a bank is when I have to go in and get a counter check because I don't have a checkbook anymore. It's one of those things. Last time we had a checkbook, it lasted what seemed like forever because we just hardly ever write checks. We do so much electronic banking, whether it's the mortgage or whatever, stuff like that. So
Most people, when I open up checking accounts, aren't even ordering checks anymore. They're using their debit card, their online bill payer. There's very seldom things that people really even are using checks for anymore. Bill payer. If you use a bill payer, a lot of times they'll mail a check for free.
Right. And I use that quite a bit too. I have two credit unions. One was with my work, and they got bought by another one that's out of Minneapolis. But I still have that account, and then I got a local one here that my wife was a part of. We just joined that account together, So, but yeah, I really do enjoy the credit unions a lot more so than the banks I used to be with, and I didn't know the behind the things of it from a shareholder standpoint, but it's definitely I've always known and experienced that's a lot more of a personal thing, and not so much personal one-to-one to physically talking to somebody because obviously the employees are local, but it's more of the service and the way it's geared towards it and who they're looking to make happy. There's no doubt about that. So when people get mad at Wall Street, they're not getting mad at credit unions because credit unions are on Wall Street. They're not occupying credit unions, so that's kind of cool. So okay. So yeah, we almost about 20 minutes. So that's good. No comments, and that's fine. Everybody's eating dinner late.
That's all right.
That's okay though. There's any other topics you want to cover that we talked about that I can't remember, or anything differently you want to mention?
I know we talked a lot about like the long-term investments, like your investing, your 401k, your IRAs, things that you can do in the short term, just managing your money, creating a budget. Looking at your account and seeing where all your money's going. Like if you're going to Starbucks 5 days a week, spending $5 on a coffee, 5 days a week in 4 weeks, that's $100 a month for 12 months. That's $1,200 you're just wasting in coffee every year. You can save money. You just have to look at where you're spending it. We do have a comment.
I'm not sure if are you related to this person. I don't want to.
Yeah.
So hello, Sue. We all know who Sue is, or anybody. Daniel's mom, and very, very, very nice lady, salt of the earth, absolutely. So thank you for saying hey. Short term, that's a good point, especially somewhat shorter term. Would be, especially if you're looking to get married and have kids, is like a, what do you call it, a 529, like a kid's educational thing for local college kind of thing, nothing for like Harvard or anything, but you can start young and a little bit each week, and by the time they graduate, they got a nice little stuff to use to go to colleges and stuff like that. I think it's the 529 plan in Ohio.
Yeah, 529 plan. Yep.
Yeah.
Um,
So, and I think that all that's available through the banks, is it not? Or the credit unions to set
through the
up?
financial advisor portion of it that handles
Right,
the-
right.
Um,
Exactly.
some places even have, where I work has it's called a college savings account.
Okay.
If you're familiar with like a certificate of deposit or a CD, that gets a higher interest rate the longer you put it in there. We have a college saver account that's, you don't have to use it for college like a 529 plan, but you have to get it when the kids are younger, and it matures when they turn 18. Gets the same rate as a 4-year CD, but it's a CD that you can keep putting money into it, whereas most CDs are fixed with whatever you put into it during that whole term. This one, for the little ones, you can keep putting money into it anytime you want, and then it just matures when they turn 18. They can use it for whatever they want. So that's another cool
Sure.
thing that some places might offer.
Right, and so we're not talking about where you work, but do you guys have the financial advisors type people we're talking? Do most credit unions, or a lot of them, do they have someone?
Yeah. Definitely.
Okay, so that's
most
nice.
financial institutions have a financial planning center or some kind of person built in to help as a service, figure out, talk about retirement,
Right.
saving money for your future, just planning to make sure that you have enough money when you need it.
So here we got a comment. This is a good friend of mine who actually, he is the realtor that I did a show with that's going to air this Saturday. So tune in on Saturday at 11 o'clock for your home sweet home, navigating to your home sweet home. A real great guy. And he had a comment about what you had mentioned. He's been telling his wife for years to save the Starbucks and go to Tim Hortons or buy a Keurig.
Use that ground, the ground stuff,
Right. That's what every couple of years I tend to buy Carrie Ann, my wife, a new coffee maker when they come out with something that's fantastic, so she can do it here at home. And she loves that stuff too. She used to be the barista type, so she, it's fun, and you do save money. And then on Christmas times, I buy her some gift cards so she can treat herself to the ones that are out there, the Starbucks, the wine and stuff like that, So
right.
As much as you can do at home, you definitely save a lot. We cooking a lot at home is another thing.
Meal planning, packing your own lunches,
right.
Saves a ton. If you buy a loaf of bread versus, and some deli meat and some cheese, you'll save a ton of money versus going out to, Frisch's and getting a sandwich for lunch every day for lunch. You're gonna spend $5 or $6, whereas it's like $1 probably per sandwich with you.
Sure, absolutely, and it adds up. And I've always found that, like when I was single, I definitely ate lunch every day. And I remember thinking, it's like, you don't even know what you want to eat anymore. Everything sounds old because you've been to all the places 4 or 5 times in a month. And yeah, it does get old, So definitely, being able to brown bag stuff is a lot nicer. So and here lately, I've actually just been, I don't know, it doesn't look like it, but I've been skipping lunch, but I just eat a bigger dinner, So it all works out in the wash, So. Okay, so do you, anything else more? You think we're good right now for this first one, or?
I think we're good.
Okay. I certainly, Daniel, appreciate you coming on, talking some money. We'll see if we get some more questions. We certainly hit on some more topics. The next time around, we might even hit on, other topics in line with it, but a little different. Maybe we'll dive into some other things a little deeper if people want to hear more stuff about cryptocurrency or whatever. I could always tend to learn some more about that. Just for knowing it, not if I'm ever going to buy it here. So, but,
right.
I appreciate you big time taking time out of your night to hang with me on the Fletch Entertainment Network, as I call it. And if nothing else, it just allows me to further my hobby, which is talking. So this is what I do.
It's been a pleasure listening to you talk.
Well, I appreciate it. So we're going to sign off for now. So again, if you got some questions later on, you can put them on, and we'll get to them next time we talk. And until then, I'm going to put that thing back on there again so we can go out with it as soon as I can find it. Here we go. So, Daniel, I appreciate it, and I appreciate everybody tuning in, and we will catch you next time right here on the Fletch Entertainment Network.